Good morning, Jags. This is Fahad. Today is Monday, June 29th. What's up? How's everyone doing?
Doing well.
Good.
Pretty good
Good.
yourself.
Good. Um, let's start off with Nicola, the fun one, right? So, Jay, isn't today the one when the company is going to be announcing something about the Badger truck?
That was that was from the Cohen initiation note.
Yeah.
Yeah,
So I
January.
just I just found out moments ago this morning with a press release that Nicola is asking customers to put down as much as $5,000 now to reserve the right to own a truck in a few years to buy, which is a battery powered truck, and they don't even have a prototype or a manufacturing plan. And on this, the stock is up 5.7% this morning. So you don't get to see what it looks like. We don't have a manufacturing facility to build it. We don't even know when it's going to be ready. But if you like one, you can put $5,000 down today, and we'll let you know in a couple of years when you can have it and what it would look like. Anyways, the stock is up 5% on this one. So um, I'm gonna, tactically speaking here, I'm gonna see if it's actually a short on this rally this morning. So I would expect some sort of fading price action in this one. Um, I think it's gonna make a lower high. So the high on Friday was 73, finished at around 64, and trading in pre-market 68. Let's see right around here at the VOP resistance level is 69 to 70 if it's going to start fading when the market opens. And if it does, then I think it's gonna, on a break below 60, it's gonna open a very, very large air pocket underneath the stock from 60 all the way down to, really all the way down to $36 per share. So let's see how the markets will react to this, because after this news, I don't know if there's anything else that the company has to announce in the short term. So I'm looking for some sort of fade here. Separate thing is that from a tactical trade standpoint, you guys all saw the news on Boeing this morning. Boeing is rising sharply, although this is also starting to fade in the last couple of minutes. But Boeing is up a fair, 5%, 6% this morning on the news that they're going to be actually conducting a test flight to this week. I don't know exactly what day is, today or tomorrow, but they're doing a 737 MAX test flight, which seems to be very interesting news because they have now expedited the move that was originally expected. I wasn't expecting that the FAA will come to provide the testing so quickly, considering that it was just last week when the FAA was complaining about the wiring problems. So seems to me that we have a sudden change of turn of moments over here in Boeing. Um, Raising issues one time, 1 week, and then next week, okay, you're okay to fly. Let's do a test flight. Nevertheless, whatever this means for airline sector in general, there's another news that is out today, which is Southwest Airlines. So from a tactical standpoint, purely from a tactical short-term trade, I'm looking for a bounce in Southwest Airlines symbol LUV. The stock has come in, and if you look at the chart closely, it is sitting at a major VOP support level right here at $31.50. And Goldman Sachs is out this morning with a double upgrade, going from a sell rating to a buy rating. An interesting thing about this note is they're saying that they now expect the 2020 improvement in the domestic air travel that they were originally expecting in post-COVID world to be slower than expected. Um, Mainly because I think that they're also seeing the rising COVID cases across the country and how New York has responded with a 14-day quarantine if you're coming from 8 states that Governor Cuomo has flagged. Nevertheless, so they now expect that the recovery is going to be far, far slower in 2020, 2021, and 2022. But despite all this, they're upgrading the stock from a sell rating to a buy rating, mainly because the company has the industry leading balance sheet, which I think is is the main reason why previously I've also flagged Southwest Airline as one of the safest bets in the airline sector that's out there. And it's also one of the best operator in the industry, mostly focused on the domestic airlines, much better than Spirit Airlines or any of the others. So considering the stock is down quite a bit and is sitting right at the VOP support level, it becomes an easy one for a bounce play with a hard stop at 31. So let's see if we get that today. We're going to probably see some green shoot because Boeing's news is also going to give it a little bit leg higher. Talking about COVID-19 cases, here is the chart that everybody needs to keep in mind. You can see where this is the Memorial Day, and that was supposedly a turning moment when everybody's starting to go out in the southern states, and suddenly Arizona, Texas, Florida, California, South Carolina, Georgia, Utah, Oklahoma, Nevada, they all became hotspot. And remember, it was right around this time too, soon after or before Memorial Day, when a lot of things had started to open up. So you can see what the red hotspots have done since then. You can see what the rest of the country has done since then, and the old hotspots, New York, New Jersey, Connecticut, Massachusetts, and Washington, how they are still trending down. So this is something to be aware of. Nevertheless, looking for a short-term bounce in the airlines, particularly in Southwest Airline, and looking for a potential fade in Nikola on this 5% gap high. That's
RBC had a note on aviation as well. Just particular to Southwest, their cash burn rate is also declining slowly, but it's gone down to 20 million a day from closer to 30 million in April or whatever it was. So just wanted to add that.
Yeah, in rate of change terms, this is definitely better, and it's not just Southwest Airline. Other airlines have also seen their overall condition improve as domestic travel did come back slightly. So in rate of change term, that's good news. But nevertheless, in absolute terms, when you look at a company burning $20 million a day, that's just a disaster, right? I mean, nobody wants to see company burn this much amount of cash. It equates to, 20 times 30, you're talking $600 million a month.
Yeah, they chew up through liquidity pretty fast, that's for
Yeah,
sure.
we're talking $1.8 billion a quarter. $1.8 billion a quarter of cash burn. So what does that tell you? That tells you that these airlines, and same thing with cruise ships, same things with a whole bunch of other service sector industries where that have huge exposure to declining markets, where the recovery has been very shallow. So what's going to happen is they're going to continue to tap the bond and the secondary share market to raise capital. And as to do that, they're going to have to continue to, they're going to continue diluting shareholders. And that's what basically becomes the bottom continues to gradually fall out, even with a recovery plan. So that's where the difficulty comes in. But this is purely a technical trade that I'm talking about. And naturally with hard stop where the VOP support is. Hey, Jay, I want to quickly circle with SDGR here. I took profits in this one. It was a fantastic write-up by you in Weekend Research not too long ago. But there is another bullish article out from Bank of America on this one today, in which now they're raising price target to 92, which is pretty much where the stock traded up to on Friday. And a brief note, but they talked about how the R&D projects that the company is announcing, basically improving confidence on the street that this company is going to transform the R&D industry for the pharmaceutical industry for a long time to come, for many months and quarters to come. My problem has always been this is trading well ahead of its expectations. As you saw, that was my only concern because it's now with nearly $5 billion in market capitalization, with a revenue base, with 40 times sales or something, and so that's where my difficulty comes in, justifying, particularly after a strong rally like this. So I would prefer a pullback, but a fantastic piece that you had out there. I'm sure many clients made money.
Yeah, and I still don't think it's recognized by many people on the street yet.
Yeah, I don't think so either. I think very few people talk about it, which is great. We would like to keep things that way. But for those who did not see that, on April 26th, this is where a bull case was presented by Jay in the Weekend Research SDGR. And in big picture, just understand that how the R&D industry, the R&D flows happen within the pharmaceutical industry. This company is going to change that mix. It's going to streamline it, and it's going to make it far easier and better for the pharmaceutical industry. So it's going to have the commanding lead in that, and that's what's about to happen in quarters to come. So it becomes a major win, a category leader basically in that space. So here the stock was at 51 at the time, and now it's trading at 84. I made like 45% on this one, and then I stepped aside, but hoping that sometime I'll get another pullback around 70 to get back in. All right, since I was just talking with you, you go first. What's up?
Sure. Well, keeping with some other picks that have worked out well, C Limited, SE. A note that, in my opinion, went under the radar. It was actually Thursday afternoon. JP Morgan was out taking their price target all the way up to 127 from 79. And, you know, we've talked about this name quite a bit, made it a top pick for Q2, and it has done extremely well. And I believe JP Morgan has done some excellent work on C Limited. Their notes are always detailed, always provide some great data points. And this one is no different. And the focal point is on their gaming segment, specifically Garena. Now, in January, the company acquired a development firm called Phoenix Labs, and that company was developing or had developed a game called Dauntless. Now by January, that game had over 20 million gamers playing, and now they are getting ready for their mobile launch. And JP Morgan's channel checks indicate that Dauntless continues to remain a popular game across many different platforms, whether that be the Epic Games Store, PlayStation, Xbox, always a top 10 download performer. And another thing is that, according to JP Morgan, and something that I did not know, is that with video games, you have the monetization opportunity, the downloadable content. Well, Dauntless apparently is a higher tiered game, so it caters to the higher end of the gaming market. So when you look at the bundle packs that they offer, you know, a typical Garena Free Fire bundle pack may cost $10, while Dauntless is going to cost you $24. And some of these Dauntless packs, which include, you know, in-game currency, cosmetic changes, I mean, you're looking at as low as $5 to as high as $100. So with a mobile launch, with monetization, keep an eye on Dauntless. And then finally, most importantly, I think, one of the topics we covered in the Q2 pick was their entrance into India and how that would become ultimately a growth driver. Well, let me just quickly share this image. So essentially, JP Morgan is saying, we have previously highlighted that C Limited strategy to stimulate a change in consumer behavior in India could be bearing fruit, which could present meaningful revenue upside from India. And when I look at that chart on the right, the downward growth quarter over quarter, just impeccable. Something that I did not think could happen. From going -6% in Q1 to 73% in Q2, I don't think people have recognized this, have just recognized this revenue growth potential yet. So something to keep an eye out when they do report their next earnings.
This is significant acceleration in India in Free Fire, first quarter to second quarter, 12% to 23% growth.
Mm-hmm.
Once again, in rate of change terms, that's the kind of stuff that basically gets overlooked most of the time, and then when the numbers come out, they just surprise materially to the upside. This is all about gaming. Are they still on tap to get the banking license in Singapore? I think
Looking at
that was supposed to happen in June, right?
yeah, in the summer, I believe. Let me quickly just, there's
Well,
no, I know they talked about it, but
keep an eye on that catalyst, because I
yeah.
think that's the kind of stuff that's also nobody's paying attention. So that would be positive as well for C Limited.
Mhm.
And then lastly, I would be most interested before the next earnings comes out to get a some sort of really good look in the channel checks for the second quarter related to the e-commerce trends in Indonesia, Malaysia, and all of those Pacific Asian countries where the company is the absolute monster leader.
Mhm.
And as I said before, the part that I absolutely love the most about C Limited, can you guess it?
Well, there's a
I'll
lot
tell.
to like.
Well, the part that I love the most is that Jim Cramer has no idea what this company is.
Okay.
I just thought it was awesome that a caller asked on Mad Money about C Limited, and this was when the stock was trading around 85, 90 per share, and I was
Okay.
watching it, and he said he had no idea, has never heard of the company. That's great. Chronicle.
Hey, Fahad. To build upon what's already been said about ad spending and Facebook boycotts, I'd like to share this summary from IAC's ad spending survey from all the way back in late March.
Yeah.
So more than 2 months ago, companies were already planning to cut ad spending. In addition to what's shown in these charts, 74% of respondents think COVID-19 will have greater impact on US ad spend than the 2008 financial crisis. And for the back half of the year, 2/3 of ad buyers said that they were considering a slash in ad spending. So I'm sharing this chart from all the way back in March to prove that these social media ad spending cuts are really driven more by the profit motive and the need to cut costs in this recession. Some of these companies like Starbucks, they're not just cutting Facebook ad spending, but they're cutting across the board. So all this talk about wanting to be more socially responsible, I think it's more of a PR move as opposed to coming clean with how bad business is actually doing. Why waste a good PR opportunity, right?
Yeah,
Uh,
absolutely.
I mean, these companies can all be saying they were planning to cut and then say, oh, we're all doing this now because we want to do the right thing. So I think that's what you were trying to get at in your Telegram post over
That's
the
exactly.
weekend.
Yeah, and I know where you're going to do. Both are thinking the same line, and then and I know you wanted to talk about WPP, that this being
Right.
bearish for this company. But it's I've been making this view now for several weeks that I'm going to say this once again very clearly. Business cycles matter. Corporate deleveraging matters. Valuations matter. And system excesses that we built during good times, during bull market years, they get cut. Capex gets cut. Preservation of gross profit margins matter in the down cycle. We the market or investors' tendency is to forget about the kind of things that happen in the corporate culture, where different expense items in the income statement basically get attacked in order to preserve the profitability as much as possible in a down cycle. And we're still facing double digit unemployment in this country. So while the market or the news media is going to turn this entire Facebook story as to some sort of racial issue or whatnot, but the reality is we have been talking about this for quite some time, that all of these expense items will be cut by across the board in the corporate world. And so this is just a plain straightforward reason, like let's do it now because it's the easy way out. And it looks like, when I'm looking at your ad spend numbers over here for digital versus traditional media, look at both of those for May and June, down 28%, down 35%. This got nothing to do with the racial stuff. This is simple, pure common sense approach in a down cycle, right?
Exactly. So if companies are cutting online ad spending, that's a massive statement because online is where we can reach the most audiences. So my thinking here is, what does that tell us about traditional media ad spending? Well, it's likely to be even worse. Because if you're not going to advertise on Facebook or Twitter, then you can forget about TV and billboards as well, for instance. So for this morning, I'm looking at WPP and Lamar. WPP especially because this company had already been facing one headwind after another over the years. Like in the past 24 months alone, we've already seen the founder of the company leaving. We've seen strong migration trends to digital advertising, and we've seen their clients threatening to leave due to the company's haphazard and unstreamlined offerings. At the same time, they've continued to lose business to competitors like Pricewaterhouse, Deloitte, even Accenture and Salesforce that are more suited to the modern age of data science and machine learning. So much so that in 2019, which was supposedly a good year economically, WPP actually missed revenue estimates by 37% for the year. The company has come out saying they're starting to adapt, but I really think it's too late and they're too far behind at this point. Another argument I see the bulls make on this stock is that the company is cutting jobs and letting go of thousands of workers, to which I would say I've never seen a company that knows it's going to grow cut jobs. Like if you're a company, you can't really lay off and job cut your way to success, for lack of a better word. So I'm just thinking here, maybe during good times, a lot of WPP's clients may have lost track of whether or not they've been spending their ad dollars effectively, or perhaps they've already realized that WPP's competitors are doing a better job, but they just hadn't gotten around to dealing with it. But I think now with the current recession, it provides the perfect excuse for them to sever ties and perhaps start looking for other agencies that are more suited to our times. So looking at the long-term chart of WPP, the stock has been in a relentless downtrend for years now. And given the catalyst of all these companies cutting ad spending all of a sudden, plus the secular bear thesis of WPP being stuck in the old times, this is probably going to drop more than Facebook.
Yeah, I agree with that. I think Facebook will catch all the attention, but if you're looking for a secular short, a theme, WPP, and I would put OMC, Omnicom, also in the same category. They're the one that'll probably provide more downside as a play here on a relative percentage basis. By the way, I still have your beautiful article on WPP you submitted to me a long time ago. Maybe it's time to refresh some thoughts on this one, and then we can send that out to clients. So take a look at that, okay?
Sure.
All right, Avo.
I don't really have any specific stock that I was thinking about. Typically Mondays, I like to see how it sets a tone, if any, for the week ahead. But there is a note out from RBC this morning that I was skimming over on ride sharing, basically on Lyft and Uber. I think it's worth keeping an eye on these two stocks because improving data. This is a little bit lagging in some respects from the report because it only covers some data covers up to last week, but other data that I keep monitoring myself, such as restaurant and the TSA throughput, have been either steady or improved, such as, for example, TSA, I was just looking at, so 3 out of the last 4 days have seen over 600,000 people, and that's a market improvement. In any case, RBC's note also covers mobility data, which is seeing steady, not huge, but steady improvements continuing all over, not only just the US, but globally as well in most locations, mainly on recreational and retail searches, workplace a little bit as well. So this, I think, is worth keeping an eye on, especially if there's more travelers, air travelers, and they're taking less taxis, renting less cars, then I think the Ubers and Lyfts are more popular. So I hear, but not having a cell phone, it's out of my realm of of lifestyle. I'd like to see some call buying, large size if I could, before thinking what to do. But I think it's worth keeping an eye on.
Okay, we'll definitely keep an eye on this one. I think it will go along with the travel team for sure. Just the only thing I would point out is that in terms of what I discussed earlier, the Southwest airline, which is purely a tactical trade, given where the stock is at the support, given the upgrade from Goldman Sachs this morning, and given the simple fact that we are going into July 4th long weekend where travel is going to be higher. And so as far as left is concerned, we traded calls in this one not too long ago, closed them for nice profit, haven't stepped into yet. I need to see better technical picture emerge, purely speaking, despite the pullback recently. And also, I've seen complete lack of conviction in call options in the last 2 weeks. I was looking for some sort of signs, absolutely no signs, just random retail traders pushing it around. But in terms of institutional flows, it's been very, very quiet. Nothing exciting for me to basically make a case that it's at technical support or we need to step in or anything. So I'll be watching it from sidelines until pictures change it, and before I have conviction to go back in. All right. Good stuff, guys. Thank you very much for joining. See you in the chat room shortly.